Thank you, everyone, and welcome back to Shashank Redemption. Today, I have a very special guest, John Green. He is the co-founder and CEO at Nada, which is a real estate investing company, but with a twist that I haven't personally seen before. So really cool stuff that they are doing there at Nada. So we will talk more about the journey, about what Nada does, and how is it radically different than everything else that I've seen in the prop tech and fintech space. And that's why I'm so excited to talk to John, is because this is one of the episodes where you're going to learn a lot about just how to build a company, how to create differentiation, and of course, John's journey himself. So welcome to the show, John.
Thank you, Shashank. I really appreciate the opportunity to join you.
Of course, it's amazing to have you. I mean, you are the kind of leaders that the listeners of the podcast learn from, and I'm so grateful that you took time out to talk to us here. John, before I get into Nada, which I'm super excited to talk about, because as I was saying just a few seconds earlier, this is a platform unlike anything that I've seen before. Let's talk about you for a while. I know you were at Pacific Union. I think that's where you kind of got into the mortgage real estate space, so to say. But tell our listeners a little bit more about your journey all the way leading up to starting and founding Nada.
Yeah, absolutely. Mine's one that's a little less, less common. So I'm from a very small town in North Louisiana, one that was really void of opportunity.
Mm-hmm.
And, my way out was really my first experience in creating value for myself and understanding that. And it was, oddly enough, I started a punk rock band with a few friends, and we were fortunate enough to be signed by a sizable record label. And I got to do that in my early 20s. I was a recording and touring punk rocker. So that really created and instilled in me a lot of what it takes to create, and the value of community, and the grit and grind to see something through. Spin it forward. It's nearly 2 decades later. This perhaps is still a little bit of a punk rocker in me. But I took that into my career. I did start first in mortgage banking. I worked, for Washington Mutual, WAMU. And then through the acquisition of Chase, I got into working at Chase. And then I did spend a time in the independent mortgage company space. And so from that journey of punk rocker to mortgage banker, if you will, I kind of ran the gamut. I had the opportunity to start in sales on a pre-crisis in the mortgage industry, and then pivot into risk in kind of processing management, risk control assessment functions. And then ultimately what I was more akin to doing was strategy and innovation for some of the top independent mortgage companies. Where I was working with the leadership teams, the ownership teams, trying to structure new business ventures, adopt emerging technologies. But ultimately, I had a first row seat into really what today's consumer was looking for, and access to assets and really financial freedom, and just some of the legacy systems that were prohibiting that, in spite of some of the great people and their efforts. And so that's what really led me to the realization to create Nada, to try to address these problems, these inefficiencies.
And talked about grit and grind, and it's so surprising because a lot of people think that the industry knowledge or the skills within the industry itself is so important and critical. And while it is, and you went through your own share of experience on that side, but just the grit and grind, the two words that you mentioned, is so important as a founder of a startup. I mean, Nada is about 3-4 years old right now, so
that's right, yeah.
A baby, so to say, from
Yes.
from that perspective. But tell me a little bit more about tell me a little bit about inefficiencies, because you came from Pacific Union, you came from being a strategic advisor to other, say, real estate and banking firms before you started it. what kind of inefficiencies that you were seeing that led you to start a company like Nada?
Really, it kind of runs the gamut in terms of, from a simplistic standpoint, this separation between segments of industry like real estate and mortgage, as if the two are not, directly interconnected. That creates an information gap just across those two sectors within, that furthers the financial literacy gap that most consumers, in my opinion, have when it comes to really understanding how to maximize and access real estate assets and the wealth that can be created within it. So you have these sectors of industry that are very separated, these silos and fractions, and things that have just built up over time, which ultimately, in my opinion, create information gaps in effect some areas of what you might refer to as gatekeepers of industry. So what I realized, and my co-founder Mauricio, we shared in, is this realization that these markets, really surrounding the financial system, surrounding real estate assets, were really being taken advantage of by the industry insiders, and really the wealthy. And so that's something that we're both drawn to, is really demystifying some of the unnecessarily complicated structures of industry, even terminology. The word mortgage is not a very relatable word. It's a pretty negative word in its core sense. So really just breaking that down to the fundamentals, and really driven by this purpose of leveling the playing field, to distill that information in a way that was understood with comfort and confidence for the everyday consumer to access real estate in different ways, from fractional ownership to online retail investing, into real estate and different assets, and that's fundamentally what's driven us. So the development of products and the dissemination of information.
Yeah, absolutely. And something that I've seen, I mean, I started Insta Mortgage in 2008, when all of us know if mortgage is a bad word now, it was probably the ugliest word, so to say, globally, not just here in the US. Yeah. And one of the first things that I quickly kind of started working on was creating that level playing field, so to say, by educating clients. My focus then and even now is first-time home buyers, and even from a company perspective. And we have I started blogging in 2009 when probably less than 10 people within this space were blogging then. And since we have created a ton of content, and so on that note, let's talk about Nada in terms of creating that level playing field, so to say, about not just having industry insiders have access to some of that equity, or how to tap into that wealth, which is exceeding $2 trillion with the US households now. Let's talk about Nada. This concept is because when I found out about it a few months back, I was like, this is a very, very cool concept. So instead of me telling about it, you of course created this thing. So walk us through first just the basics of somebody has not heard of the company before. What would you tell in say in a few sentences, what does Nada do?
Yeah, absolutely. So Nada is, at its core, we are an investment finance and banking platform that's built for the purpose of making real estate assets more accessible to everyone. So that's just fundamentally what we are. As a mission, as a company, our core focus is to create products and experiences over transactions that further this unlocking of assets and financial freedom. And so our core products are really solving two key problems by unlocking access to that 20 trillion plus homeowner equity market. It is a two-sided problem, two-sided marketplace. On one side, you have the homeowner that, especially today, has built up equity, the largest asset on most consumers' balance sheet. Yet it's fundamentally inaccessible, unless they're taking on more debt, they're selling their entire home, or these very compromising positions. And on the other side, you have your everyday consumer investor that generally is locked out of real estate. Of course, we have REITs that have been around for some time, and there are some great REIT products to invest in. But that's a bit of an opaque investment, not very intuitive, not very accessible from an information and understanding standpoint. So you have this lock of retail investors getting access, and then specifically not having access to homeowner equity, in a simple manner. So we've built this platform that solves these two problems in a way that creates value on both sides without really taking advantage of either. That's a very important purpose-driven focus we have here. And so if you're a homeowner, we have our Visa debit card, which is a home equity debit card. And this makes it possible for a homeowner to access and spend fractions of their home equity for everyday spending. It's a great product to offset inflation, to just generally diversify and access more assets in terms of spending. And in doing so, we're not adding, this is a true equity investment. It's not a debt product. So the owner is retaining the full ownership benefits of equity upside and ownership rights in the home, yet they're accessing equity to spend and access, and diversify their money in any way possible. And on the other side, we have launched a series of real estate investment funds. These funds, we refer to them as city funds. And a city fund makes it possible for any investor, accredited or not, to buy and sell shares of a top city's home equity market. So, for example, we've launched Austin City Fund, Dallas City Fund, Miami, Las Vegas. Each city fund is designed as an index-like vehicle to represent that single city's residential real estate homeowner equity market. And so by us diversifying these pools of funds made accessible to retail investors, that's how we're able to get the primary financing to then issue to homeowners the home equity investments that they can access on their Visa debit card. So you have liquidity for homeowners without debt, with cashback earnings, all the benefits of a specific banking type function, while you're also opening a market to any retail investor, accredited or not, to invest in a top city for as little as $250.
So walk me through this, because this is ingenious, so to say, is because, as you rightly mentioned, that the $20 trillion equity kind of, I wouldn't say stays untapped, but you have to go through this process, as you rightly mentioned, of taking a HELOC from it, or of course, I mean, you can just sell the real estate, which you may or may not want to do it. Walk me through how a homeowner will actually use this. So say if I'm a homeowner, I have a $2 million home, $800,000, say, mortgage on it, I have this sitting 1.2 million equity, so to say. If I wanted to tap into that with something as simple as it sounds like a Visa debit card, which congratulations, I know that you launched that recently, which is a serious upgrade, of course, in terms of consumer experience of being able to tap into it. But John, just walk through how would a homeowner kind of come to NADA, and how would the process look like for them to be able to tap in with a debit card here in this case?
Yeah, so the way it is on a home by home basis and how we're underwriting, we are underwriting more the collateral and the equity position than we are the consumer. So we offer and extend this through our centralized mortgage loan sales team. It's a product that we extend. It's just, this is an equity side financing product, to where obviously traditionally we've been selling debt financing products on the same asset. And if a homeowner wants to access a fraction of equity, there's certain basic qualifying criteria, such as their combined lien to value that we're willing to tap into per market. In most cases, we can go up to 90%. And it's a matter of taking the property value, which we do an AVM model to make it fast. Consumers have the optionality to upgrade to a field appraisal if they feel more comfortable doing so. Very similar to how any type of mortgage product would exist in that regard. And the way that we're pricing it to protect our investors is we're saying the face value, the market value of the home, is at a 10% risk-adjusted discount value. That's the agreed upon value. And then whatever percent of equity you're trading is what you're getting an option advance payment for that. In exchange, we're getting that option agreement that we can exercise down the road in either a 10-year term, or what's most common is when you sell the home, in the next 4 to 5 years, or if you choose to do a refinance, in which case you could pay out the option at that point. But the the homeowner is receiving cash upfront, and we are effectively becoming a co-investor alongside them in the home. And it's a true equity investment. So there is the risk that we do carry, that if the home value does depreciate, we would share in the loss as well.
Which is pretty amazing to think, is because, I mean, when you go and get, say, a home equity line of credit, I mean, that's not going to go down just because your home value went down, right? I mean, if you took a $300,000 home equity line of credit, that's a debt that you're carrying, and you're promising to pay the full $300,000 with whatever interest. What you're saying at Nada is that you are, so to say, becoming partners in the appreciation or depreciation if that happens, the value goes down, but you're kind of equally invested on both the real estate cycles. And which is quite incredible, is because at the end of the day, you would think that that's our base value. Like if you're taking $100,000 out, that's our base value. We will be part of anything that goes up, but you're on your own if something goes down, right?
Yes. Yeah. So that's the true nature of the equity investment piece is, we share in the upside and the downside, which makes it more flexible. And you flip that to an investor side point of view, then you have, and Austin is our best market. I mean, everyone's still really drawn to Austin in terms of investing into it. And it's a market that has a very simple issue that I know you'd be very familiar with, considering, your experience in the industry. It's a very simple supply demand side issue. We can't manufacture more land. And as such, there's such limited supply. Yet you have homeowners that have realized great equity appreciation. So by unlocking this asset, there's a tremendous appetite for investors just to participate in that otherwise they don't have access to. And so we don't need to go out and create alpha or be over aggressive in terms of some type of multiples on our share of appreciation, and still very much satisfy the investor side of the market.
So usually, I mean, you will see some great startups on the proptech and fintech, and I've been in the industry long enough, and I know a ton of founders. They usually have one great product or one great, say, customer base that they're trying to help unlock some of the things that was not possible before. But with Nada, the way I see it is that you're not just helping the homeowners tap into that equity with something as simple as a debit card, but you're also helping so-called retail investors, small investors. They may not be either, they probably don't know about REITs or something that they don't feel very comfortable investing in. That might be, I don't know, too much of jargons, too much of stuff that they don't understand. But something as simple as investing in markets like Austin or Nashville or Tampa and Dallas with 20% plus kind of a growth kind of markets with as little as $250. I mean, how does that work?
Yeah. So that's an amazing thing that we've really had an opportunity to see the growth of that retail investor market. And it's virtue of the Jobs Act, which created SEC exemptions for private companies to have public offerings for items such as real estate investment funds that they could extend to accredited or non-accredited investors and yet maintain a private company standpoint pass-through entity. So we've realized that from there's a ton of platforms that are doing all types of alternative assets that are now made more accessible. There's public.com recently acquired a company called Otis, which is doing some interesting things around more various asset types. And so seeing that and understanding the growth and awareness of that market, and then really just saying that, okay, a REIT can be managed great, but it's very much this, siloed information. There's an expert on the other side. And as a consumer, you're saying, I'm going to trust the expert. In this case, we're saying, hey, we're investing in the majority stock of the housing supply in this specific city alongside homeowners. And it's a simple, intuitive decision of, do you think investing in fractions of homes in Austin is a good investment? Yes, no. We're making that very simple decision possible, and it's attracting quite a bit of investors on platform. We are a company that has regular SEC filings, so we are, even at this stage, we are far more advanced in that regard. That's some of the experience that Mauricio, my co-founder, and I've had that really helped us be better positioned for that. To where, it's a Regulation A exemption that makes it possible for us to accept up to 75 million from retail investors on a rolling 12-month basis.
So talk to me about the fact that you have all these homeowners as part of NADA, and then you have, of course, the real estate investing platform. What's next? I mean, do you think in terms of products, does bringing mortgage in some form make sense for NADA down the road? Because you have all this database of people where you probably know where their first mortgage rates are. And as of now, if they have to refinance, they have to pay off the second, but maybe do something on the balance sheet where they don't have to pay off, say, another second or something. Is that something on the roadmap that NADA is thinking about?
It actually, it's something that we've already established. So
okay.
we have a fully operating mortgage brokerage, and so because the home equity investment is not a debt product, it's not on a state-by-state basis, there's not clear regulatory guidelines. There is precedent and acceptance of these type of real estate contracts, but we're very much a risk-first, compliance-first company in how we build and release products. And so we've taken the stance in any market we are extending home equity investments to consumers. We're only doing so through licensed mortgage loan officers because we're of the belief that that's the most qualified individual to extend such a product. And so, yeah, we have an amazing team. Our head of sales, Sundance Brennan, has built and led sales teams for Quicken, Loan Depot. He's got a great team and a great reputation. So that is absolutely something that we have in place. And the debit card product that we offer is attached to any type of really real estate based financing. So even today, as we're pivoting on the debt side into more of a cash out market as opposed to rate term, we are still offering incentives to our clients that if they're getting, say, a $50,000 cash out balance, we'll give them the option to accept that balance on not a debit card and to earn 1% cash back on the total amount that they've received. And we're able to do that because of our Visa partnership and the revenue share that we gain on the interchange rates from merchants. And so we're trying to create that really, we see it as, we're delivering experiences over transactions in any regard.
Yeah, I can see that with practically everything that you're doing. Let's switch gears a little bit, John, here and talk more from a founder perspective of the journey from thinking about the concept. We talked about briefly on how you figured out some of the inefficiencies within the marketplace and then went on to start NADA. But nothing happens overnight. Nothing goes smoothly, as probably both of us know, and a lot of people listening to this podcast would know if they have been in the startup space, or they have been trying to start a company. Talk to us about how did you come to where you are with NADA and some of the early challenges that you faced, whether in terms of selling the idea to people or raising funds, or really anything that you can talk about in terms of entrepreneurial journey in the last 4 years.
Yeah, it's a great point, and it's something that I believe is not shared as much as it should be. So I really appreciate this platform for that.
Sure.
I would say if you're going to start something, then you really need to fundamentally believe in it. In my case, you need to, in some extent, have experienced and understood your problems. And if you don't have that conviction and really that grit behind what you're doing, it's going to come through. Whether it's in an investor or partner meeting, it's going to be a blocker. are to what becomes very critical as you begin to grow in your culture and the team that you surround yourself with. If you're not firm in who you are and what you believe in, then it's hard to imagine you're going to be able to surround yourself with people that share in that. And that without that, that makes success very complicated. The reality is that that's not a measurable, quantifiable process to build culture and conviction. It is something that you arrive at only through reflection and really dedication to listening, to understand to your peers and your customers.
How about the co-founder, John? One of the questions that I get asked a lot, and I have little experience with it because I started and started my own. I've kind of stayed that way. But one question that I get asked a lot about people thinking of starting something on their own is that, what are the pros and cons of having a co-founder? And I mean, I can theorize what it could be, but I haven't lived that life. You have. Walk us through, if someone had that option, should they take that? And if they do, then what are the things they should look for in a co-founder while thinking of starting a company?
Yeah, that's a great question. I'm in a very fortunate position. I have a co-founder that is amazing in experience in Mauricio and in alignment and vision. So it really fundamentally goes back to really being comfortable in your own skin and who you are. And so that when you are getting to know someone in the capacity of a co-founder doing this, there is probably no more intimate relationship than perhaps your spouse or your therapist than that of a co-founder. So you need to understand that this is a person that you're likely going to be that bonded with if you're going to have success. You know, in my case, Mauricio and I have very diverse backgrounds. You know, I'm from this small rural town in North Louisiana. He's an immigrant from Mexico that, you know, he went to Stanford. He dropped out at 19, started his first company. He failed fast. He was one of the rare few that got back into Stanford. And then he went to Wall Street, joined Lehman, and experienced the walkout there. To then come back to consumer finance, you know, and has just an amazing career. But at its core, like what we're driven by is creating something that is delivering value and really understanding that value, and not for gratification standpoint, but just for understanding the problem and the value that we're delivering. And that's what consistently drives and bonds us. And it gets very challenging at times. It is an absolute roller coaster. You know, there are highs and lows at all points. And so having someone there that really aligns with you on the core fundamental goals and the drivers is paramount. But if you have that, I believe that it really maximizes your potential output.
Yeah, so well said. And just on the kind of wrapping up here, we are coming to the end of time. Let's talk about future a little bit, John. Here is that where do you see NADA doing? Of course, in a fast-moving proptech space, I shouldn't probably be asking you 3 or 5 years. I'm sure you have thought about that. But let's talk about me, because when people ask me, where do you want to be in 5 years? It's like, okay, let's talk about the next 5 months, and we'll talk about the next 5 years later. But where do you see NADA specifically, but generally the proptech space? I mean, proptech/fintech space, it has had a fair share of turmoil recently, without naming names in the industry here. And so where do you see both NADA and the space itself, say over next, I don't know, year or two?
I mean, there's certainly market volatility, you could say market correction, but you know, however you look at it, there, in my opinion, there is this definitive drive to look into companies in any capacity to see what fundamental value, what job to be done are you solving? And I think any company needs to really focus on that. You know, not just exploiting market opportunities or taking advantage of these opportunities, but really delivering meaningful value. That's how we view this. And And so this is a massive market. And so we very much are driven by inspiring and being inspired by our peers and trying to bring up other folks into this industry to move it forward with the right mindset. So that's something that's important to us as a company, is to grow together. There's no silliness in presuming there's any winner take all on anything in this market. And to be more specific to NADA, where we want to take our products, in particular the city funds, is each city fund is an individual vehicle. They're not cross collateralized. And so we intend to list each city fund publicly, to where any retail investor could simply access Austin City Fund, Las Vegas City Fund, in whatever trading app they would like to. We want to make that more accessible, and we have an eye towards doing so. And in terms of access to home equity, or kind of opening up other alternative assets in the same way, we want to make it as simple as individuals moving money out of their savings into their checking, so that they can access that to really cover everyday costs and be better prepared in times of financial stress and inflation that we're facing today. And so we're really focused on advancing that for in terms of greater access and consumer good.
I really love everything that you've done with NADA. I mean, starting with a very minimalistic style, so to say, from logo design to the tagline to the website and the products itself. It's I think the core value that you provide is not just the value that they get from your products, but the simplistic, minimalistic way of being able to access it. I think that's the big play for NADA here, is not that people were not able to access, say, home equity before, or investors were not in a position to invest in real estate before, but the way you have done it and your co-founder has done it and your team has done it is incredible, is because I think it shows in everything that you're doing that minimalistic approach or simplistic approach is what drives retail people, is because in my own experience, that's what I've seen, is that otherwise, even though it's one of the best investments or something that you can tap into, nobody wants more debt. Nobody wants more complicated way of doing it, is because 98% of the population probably does not understand that. So kudos on building that, John.
Thank you. That means a lot.
Yeah, this is, we need founders like you. We need pioneers like you. We have had some other guests on this podcast who are doing something similar on a very different field, of course, not in the same line as you, but I'm always inspired by entrepreneurs like you. We're trying to take huge problems, but really finding easy, simple, and easy to understand kind of a solution. So thank you for doing that for everyone, really, and wish you the best with NADA, and hopefully see you at NYSE or NASDAQ sometime soon. That's on the company's roadmap. I'm sure you will get there. But thanks for sharing your story, NADA's story, and
thank you for the opportunity.
Yes, and listeners, you just heard John Green, CEO and co-founder at NADA, talking about the fact that you don't build product or technology for product or technology's sake, but actually to solve real life problems, which he, of course, experienced being part of the industry before. But that's how you build long-lasting company that adds value to its customers every day, and not just a company that's trying to be opportunistic, as you said, is in a certain environment, because you will do well for a year or two until that opportunity exists, and then you will lose value, and then you will lose relevance. So thank you again, John, and then thank you all of you for tuning into this latest episode of Shashank Redemption with your host here, Shashank Shekhar, and with our special guest, John Green, CEO and co-founder at NADA. Thank you.
Thank you.